Welcome back, traders. Are you ready to gain a competitive edge in the market and understand the inner workings of investor psychology? Today, we're delving into a captivating topic that can revolutionize your trading journey, the Fear and Greed Index. But before we dive into the fascinating world of the Fear and Greed Index, don't forget to show your support by hitting that like button and subscribing to our channel. By subscribing, you'll never miss out on our latest videos filled with valuable insights and strategies to elevate your trading skills. So make sure to stay connected with us. This powerful metric measures market sentiment and can help you navigate through the ups and downs of trading. So if you're ready to unlock the secrets behind investor psychology, stay tuned as we delve into the Fear and Greed Index and how it impacts your trading journey. Let's jump right in. So what exactly is the Fear and Greed Index? It's a metric released by CNN Money that gauges investors' sentiments on a scale from 0 to 100. The lower the index, the more fear there is in the market, indicating potential undervaluation. Conversely, a higher index suggests greed and the possibility of overvaluation. It's all about understanding the emotions that drive the market. Do you know why it's so important to understand the Fear and Greed Index? Well, it's because this index can give you some really useful information about how people are feeling about the market as a whole. When you combine this index with other things you're considering, it can help you make better decisions and save you from having to do tons of research. But remember, it's not the only thing you should rely on when making trading choices. So, how is the Fear and Greed Index calculated? The Fear and Greed Index is actually calculated by looking at 7 important indicators that give us insights into how the market is behaving. These indicators cover different aspects of the market, like how strong asset prices are, how much the market is swinging up and down, how in-demand junk bonds are, the momentum of the market, which sectors are dominating, surveys of investor sentiment, and the activity of call options. By analyzing all of these factors together, the index gives us a pretty complete picture of how people are feeling about the market. Now, let's discuss the different levels of fear and greed in the index. This index has a range that goes from extreme fear to extreme greed. When the index is in the extreme fear range, it means there's a lot of fear in the market. This is usually a time when people are feeling cautious and uncertain. However, it's worth noting that during times of extreme fear, there can also be good opportunities to buy assets or invest, as prices may be lower than usual. On the other hand, when the index reaches the extreme greed level, it means there's a lot of excitement and enthusiasm in the market. This could be a sign that people are feeling overly optimistic and there might be a sense of euphoria. It's important to be cautious during these times, as an extreme level of greed could indicate that the market is due for a pullback or correction. It's always a good idea to be mindful and not get carried away by the hype when the index shows extreme greed. So how can you use the Fear and Greed Index to your advantage? For short-term traders, it can be a helpful tool to time your trades. When the index indicates fear, it might be a good time to buy, while greed might be a signal to sell. However, remember that timing the market perfectly is challenging, so use it as a complementary tool rather than relying solely on it. For long-term investors, the Fear and Greed Index can guide you in making investment decisions. When the fear is high, consider buying more shares at potentially lower prices. Conversely, during periods of extreme greed, it might be wise to exercise caution and assess whether securities are becoming overvalued. Another way the Fear and Greed Index can be helpful is in determining your asset allocation. Asset allocation refers to how you divide your investments among different types of assets like stocks, bonds, and cash. By considering the market sentiment indicated by the index, you can adjust your portfolio allocation and make risk management more effective. During bearish trends, when the market sentiment is fearful, it may be wise to increase your allocation to cash. Cash is considered a safer asset because during uncertain times it provides liquidity and acts as a cushion against potential losses. This allows you to have more flexibility and a higher level of protection during market downturns. On the other hand, during bullish trends, when the market sentiment is more optimistic, you might consider allocating more of your portfolio to securities such as stocks or bonds. This is because during these periods, there may be a higher potential for growth and returns in the market. By adjusting your asset allocation based on the market sentiment reflected in the Fear and Greed Index, you can make more informed decisions about where to allocate your investments effectively and manage the level of risk you are exposed to. So, in conclusion, the Fear and Greed Index is a valuable tool for traders and investors to gauge market sentiment and make informed decisions. By understanding the emotional impulses that drive market movements, you can better navigate the ups and downs of trading. Whether you're a short-term trader looking for opportune moments to enter or exit the market, a long-term investor seeking to identify overvalued or undervalued securities, or someone focused on asset allocation, the Fear and Greed Index can provide valuable insights. Remember, while the Fear and Greed Index is a useful tool, it should not be the sole factor in your decision-making. Combining it with fundamental analysis and other technical indicators will help you form a more comprehensive view of the market. To track the Fear and Greed Index, you can visit websites like Alternative, the PY Investing, CFGI, or look into Bitcoin.com, which provide daily updates on market sentiment. So the next time you're considering a trade or making investment decisions, keep an eye on the Fear and Greed Index. Understanding market sentiment can give you a competitive edge and help you navigate the ever-changing landscape of the financial markets. We hope this video has provided you with valuable insights into the Fear and Greed Index and how it measures market sentiment. If you found this content helpful, please give likes and consider subscribing to our channel for more educational videos. As always, happy trading.